The global equity markets experienced continued volatility in the second quarter, with the US Federal Reserve Bank extending its timelines on raising interest rates and the UK referendum on leaving the European Union in late June. Stock market performance ranged from slightly positive total return for the S&P over many European indices such as the DAX being slightly down, to the S&I with a moderate plus of 4.7%. The Nasdaq Biotechnology Index NBI remained roughly unchanged with a negative 1.1%. Biotech stocks underperformed general equity markets by around 20% since January 2016. Valuations for the biotech blue chip companies have reached their lows of 2010-11, trading significantly below the US and EU large pharmaceutical companies and below the average S&P multiple. The smaller and mid-sized market cap companies continue to trade with record low pipeline valuations. Healthcare reform discussions continue, but the drug industry is starting to become more vocal about its interests and value proposition. The ongoing US presidential election will continue to highlight challenges for the US healthcare system. Payer pressure continues to impact new product launches. Drug launches are expected to face increasing hurdles if they do not address high unmet medical needs and if there are multiple alternatives in the market. Investor fund flows were negative in January and February of 2016, but have begun to stabilize in recent months. Pipeline news was only recently adequately acknowledged by equity markets, with good news leading to significant upside. This is in contrast to the first quarter, when good news was hardly reflected at all. The strong progress by many portfolio holdings continued. Many companies have delivered substantial progress that has not yet been reflected in their valuations. Importantly, new investment candidates were identified in the smaller and mid-cap universe, with attractive investment cases offering the potential to develop into profitable, mature biotech companies in the mid to longer term. For the second quarter of 2016, BB Biotech's share return was minus 2.7% in Swiss francs and minus 1.2% in euro. For the same period, the NAV gained 1.4% in Swiss francs and 2.3% in euro. The NAV performance started to stabilize in the second quarter and outperformed the industry benchmark. Clinical trial results, product approvals, and launches, as well as one M&A announcement, have contributed very positively in the second quarter. Overall, BB Biotech's portfolio companies reported on important milestones from Gilead, Actelion, Radius, and Sempra. Even more impact and short-term share price developments were experienced following late-stage clinical trial results from Tesaro, Regeneron, Alexion, and Agios. While safety concerns for two of Ionis' late-stage pipeline candidates resulted in a severe correction of the company's valuation. M&A continued to play a minor role for BB Biotech's portfolio. Although many large pharmaceutical and biotechnology companies outlined their appetite for acquisitions, none has yet followed through with a transaction. An offer for Medivation was announced by Sanofi in late April. BB Biotech believes that the offer undervalues Medivation and will closely follow the situation. We sold both Infinity and Clovis as the original investment hypothesis no longer held true. 3 new small and mid-sized companies were added to the portfolio, namely Intracellular Therapies, Macrogenics, and Tabera Therapeutics. BB Biotech anticipates 2016 to remain volatile for biotech equities. Nevertheless, product approvals and a high rate of readouts from key clinical trials are expected to accelerate throughout the remainder of the year and offer the potential for significant growth in share price valuations. Important regulatory and clinical trial milestones are anticipated for companies in BB Biotech's portfolio, including Neurocrine, Radius, and Medivation. Many important clinical trial results are also expected to impact company share prices, including Vertex, Incyte, Celgene, Novavax, Intracellular, Tabera, and Sage. These and many other milestones are expected to support the strong fundamentals of the portfolio and the sector in general. With the historically weakest quarterly results behind us, solid financial updates are expected from portfolio holdings in the coming quarters. The portfolio continues to focus on innovations leading to effective treatment options.